guys, this is Sam from HDFX and welcome to another video. And I would like to talk about pound Australian dollar, okay? Now in here, what I care about is from the end of the wave and to the other end of the wave, and we have this sort of Fibonacci ratios, okay, that we should care about. So these three lines, I changed them, they should not be here. So let me try to explain. So in here, what I was thinking actually is after this move that I will show right here, this move, this consolidation period, and the market is done some type of a correction, something like this probably. So we have a B wave, and a C wave. Now, is that possible? Well, it is, but can we be wrong? Absolutely, because the time perspective I don't like. Okay, like so. It's not even, as you can see, it's not even like this. So, what to do? Well, then let's change this consolidation period a little bit in a different way so that we can have a different perspective of what's going on. Okay, so what if we have something like this? So we have an A, B, and a C wave here, and an X wave here. Okay, so actually what I did first was for you to, so you guys can understand how to change it, how to fix it. Okay, now if that's the case, this is the wave A, and then maybe something like a B wave and a C wave. I like these ugly triangles. A D wave and an E wave. Now, if that's the case, this is our B2D trend line, broken and retested, and you can say a C and E, or actually you can have A and E as well here, because this actually doesn't penetrate it, it just touches it, it doesn't break it. I can count that as well. It can be A and E, it can be a C and E, it doesn't change the fact so much. So if that's the case that we are looking for here, then what starts next and also what ends here on the bigger degree? Now, let's say that something ended here. As of now, we have no idea. Okay? So after this, what we should do is we should look at what kind of wave it starts, okay? Now, my initial thing was to put wave A here and B somewhere here and the C somewhere here. Okay? Now, if that's the case, it looks like 1, 2, 3, 4, 5 is a wave A, and 1, 2, 3, 4, 5, and this time is a first wave extension on this impulsive move, and the third wave extension on this one, and the B wave retraces less than 618, so everything fine. So now that we looked at the Elliott part of it, okay, so then we have some kind of a clue what it is, okay, and we don't know at this moment if this is an X wave or whatever. What I would like to see here is, so we may be on the X wave here in this way, okay, maybe, or the X wave came here, or, but we are more likely to be on X wave. Now, what I'm actually looking for now is this trend line. Now, look at it. Support, 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 support. Now, fake break. Now it becomes support, support. Now then breaks here, resistance, and this is where we are. And this is where the wave ends. Okay, so what I do is I take the fib from this wave ends and this wave ends. Okay, so I connect them, and now we have some type of Fibonacci ratios that we can use. So this is the first one, the 0.236, which came right here. The other one is 0.382 here. Another one, 0.5. Another one is 0.618. Now, as you can see, the market has respected this very good. so far. And I have my RSI level here. Now this place was a nice go long opportunity for some small pieces. Why? Well, look at it. We have our fib level here. We have the structure level. We have 1 to 3 times. So you can even consider this as a triple bottom. You have the RSI oversold, and it was a nice long. Now, what to do next? Well, you can think a couple of different stuff. First of all, when I was looking at this chart last week, I thought this was going to be an inverse head and shoulder pattern, and it was this fake break. And if I did take a long here, what I would think to take my here to take profit, first take profit because of this, and then you should have at least think about this and make it risk free after this, and you would probably take half of it off here, and then that the trade would be done here. Now that this pattern didn't work here, but we were also so close to overbought condition and this, then you could have said to yourself, okay, what about if this is the head and shoulder pattern right here? Okay, well, then you could have gone short, retest, go. First target, second target, this. So this is about what you want to be. If you want to be a counter trend trader, you could have taken, if you're a counter trend trader, what you should have done is bought here. Because this you would move against this pattern here. If you're a trend trader, what you should have done is come back on the retest. You could have sold. In either case, because of these fib levels, because of our Elliott wave count, you could have taken some trades in this pair. Okay. Now, on the Elliott perspective, this X wave at this moment we don't have any idea what's going on. Okay, even if this count is true, in here there is not a trade here that I would like to see. What I can say, for example, what I would like to see is something like this. So now on a lower degree, I would go like this. I want to see if we have something like A, B, C, D, E as a triangle, and the D wave to come maybe on the 0.236, and then to come here. What I'm looking for, if this is the case, then we should go up. Okay, if we will have a triangle such as this is what I'm looking for. Will the market do something like that? In that case, but look, even if you don't have any idea about the Elliott wave perspective, we could still trade some, because when you're using all of them together, the market makes more sense. And if it's not, then I would wait. If this breaks, then it's most likely that this X wave is done, and then we should be looking for the next corrective phase of this move that started from here to the here. Okay, if it breaks to the downside, it means that the X wave probably done a little bit earlier, and this pattern from A, B, C, X and something has done. Okay, this is how you guys should treat. And also you have this 0.8 here. If it goes down more, and this 0.61 structure doesn't hold here anymore, you know where this pair will likely to go. And if it goes up, these are the levels of interest, okay, for us. So I hope this makes sense, guys, and please don't take this nothing as a financial advice. These are just for your educational purposes only, and I would like to see you all on the next video. So take care. Bye bye.